And now to a man whose career has taken him to the peak of business and economic influence. Until recently, Sir Richard Lambert ran Britain's most powerful industry association, the CBI. Before that, he spent a decade as editor of the Financial Times, and he's also been a member of the UK's Monetary Policy Committee, which sets the Bank of England's interest rate. Sir Richard is now Chancellor of Warwick University and a British business ambassador, unsurprisingly, and he joins me now. Sir Richard, welcome to the programme.
Thank you very much.
Well, let me go to climate change first, because I know you're on your way to a conference in New Zealand. You've picked the right week, though. Yeah. The Australian Trade and Industry Alliance kicked off their campaign claiming that our carbon tax is the largest and most damaging carbon tax in the world. Can you empathise?
No, I don't agree with that, actually. It doesn't seem to me that Australia is out of line with what's happening in other parts of the world, particularly in the European Union. The numbers they threw up for the amount of money raised through the European trading system, first of all, they were, I would ask questions about the assumptions that they were making. They weren't numbers I was familiar with. Secondly, they were looking backwards at the European system, the amount that had been raised over the last 6.5 years. It's in the next 6 years that this cap and trade system in Europe really starts to bite, and the numbers will be very much substantially higher.
So when the critics of Julia Gillard's policy say that we're going too far and too fast, particularly at a time when, say, America, the climate change issue presumably has gone quite far down the agenda now.
Yeah. Well, all I would say, and obviously Australia has to decide what it wants to do, and I'm not here to tell them what to do, but I think that Australia doesn't look like an outlier. It looks as a sort of middle of the pack to me. I mean, you're talking about reducing greenhouse gas emissions by, I think, 5% by 2020.
That's right.
Compared with the year 2000. Other countries, including in the European Union, are being more ambitious than that.
So you're very positive about the world together moving forward on this?
No. There's a lot to be done, and there's you mentioned the US. That's nothing much happening there. But if you look at China, if you look at India, if you look at New Zealand, if you look at other parts of the developed world, you'd see stuff happening. And I think the thing I would emphasise, again, just from a narrow UK perspective, is this isn't a zero-sum game, so that it's not a case of, a win for the environmentalists means a loss for business. There's a lot of new business, there's a lot of innovation happening, there's a lot of new investment happening around all this green environment. So I think it's more positive, perhaps, than otherwise you might think.
News Corp, you were famously the first editor of the FT, I think, to back Labour in an election.
You've got a good memory.
We've now got an FBI inquiry in the US on News Corp. What will this do to Rupert Murdoch's power in politics, do you think?
Well, it's kind of in the UK at the moment, it's rather pathetic, because you can see all the MPs are springing around as though they've been let out of jail because they've been so nervous about Mr Murdoch for all these years, and suddenly they're feeling, wow, we can do what we like, rushing around. I think that obviously it will have a long-term impact on the influence of News Corp. Newspapers in the UK, they've got 35% of the print newspapers in the UK, and I think there's a concern about that. The scandal, which is what it is, I think it has more important implications than that. Criminal activity in a major publication, questions for the police, questions for the Prime Minister.
Before the scandal broke, your old newspaper, the FT, led a campaign, a very strong one, against Murdoch and the takeover of BSkyB. What did you make of the regulators waving that deal through?
I thought that they were obeying the law, which I'm in favour of, so I didn't actually necessarily agree with what the Financial Times leaders were saying. I mean, the rules were such that it, had there not been this political earthquake, it would have been. You would have had to, I think, jiggle around with the rules to stop the takeover, and I think that's always a bad idea. So I don't think it would be right to think that was going through political influence. I think it was what the competition policy would have argued for.
Let's pull out to macroeconomics and the US and the debt ceiling. Yeah. We've got this $1 billion trade bet now on the US losing its AAA credit rating, but it's the known unknown, isn't it? We don't know how the financial markets would react to that.
No, it's completely without precedent, and that's I'm used to the world muddling through, so I will bet that the world will muddle through this and that they will come to some deal. I suppose the anxiety would be that they must do a deal, mustn't they? They've got to do a deal. But that it might just be, a fudge, and they might try and do a two-stager, and that will, in 6 months' time, be again saying the US public finances are running out of control. What are they going to do? How are they going to get back into shape? I can't believe, even though gold is at an all-time high, the Swiss franc against the dollar has never been higher, and US long bonds wobbly.
And what about your neck of the woods, Britain and Europe? I mean, I think you said last year that business, investment and trade will be the engine of the recovery.
Yes.
We've had a very low pound, but again, the GDP figures today are very weak in the UK, aren't they?
Yes, they are. There are a lot of headwinds in the European Union, and although the UK is not part of the Eurozone, so actually we're in a sort of safe haven in a way within the European Union. Our interest rate spreads against the German bonds are very narrow indeed, unlike other countries. But there we have big public spending cuts going on. We have a banking sector that's still halt, and we have consumers who are facing a big squeeze because inflation in the UK is running well above wage settlements. So
you recently wrote a piece on short-termism, the lack of long-term investment in manufacturing in particular, and the risk of companies in Britain being picked off by foreigners. We have very similar problems. What do you suggest to avoid that?
Well, I don't suggest you set up a FIRB like you have here. I think that's not a good idea because that's too arbitrary. I think what you need is, first of all, you need to have a system in which long-term investment is encouraged rather than discouraged, which is it in the UK by the way the rules work. Institutional investors are net sellers of equity year after year in the UK, and that's because of the way the tax system works and because of the way regulations for pension works. So you want to encourage institutions to own shares for the long term, and I think you also want to incentivise managers to manage for the long term. I mean, all the pressures in the UK are for short-term profit maximisation, which is a bad thing.
And we've heard that before. Sir Richard, so many questions. Sir Richard Lambert, thank you very much. Do come back.
Thank you.